Welcome back to Vantage. Emerging markets were performing strongly through 2025, and that looks to have continued into 2026. I am delighted to bring two people from an economy that I think requires a lot of focus. Welcome back to Vantage, Khan, and welcome, Michael. Before we start, maybe you can just go over your respective roles and what you do for Vietnam Opportunity Fund.
Well, thanks for having us back. Thanks for having me back, and really great to have Mike join. My name is Khanh Vu. I'm the portfolio manager of the VinaCapital Vietnam Opportunity Fund. This is a London-listed FTSE 250 fund that focuses on investing in Vietnam.
So my name is Michael Kokalari. I've been at VinaCapital for almost 10 years, and I'm focused on the overall macro strategy. Of course, emerging markets, we have to be very careful what happens with the macro cycle up and down. And I also get a little bit involved in some of the stock market strategy for the VOF fund, which is my background before I joined the firm.
And Michael, first time I'm meeting you, so let me pick on you first, okay? The Vietnamese economy has shown remarkable strength, and particularly enduring through all the tariff noise of 2025.
Completely shrugged it off.
I know, and VinaCapital recently published an outlook for 2026. So give us the highlights. What are you trying to show to people?
So the main point as regards to 2026, especially in the investment context, is that last year the economy was largely driven by a surge of exports to the US, particularly of high-tech products, laptops and things like that. Those exports will still be there this year, but what we see happening this year is a transition to more domestically driven growth. In particular, consumption, which is almost 2/3 of the economy. We expect to have a fairly big pickup in that, and that should really benefit your portfolio companies, I think.
Okay, and I always, there's always this sort of conversation about Vietnam progressing effectively from its emerging market status, etc., and becoming more investment grade. What's the background to that? Give us an update in terms of how that's sort of progressing and what the impact of that is actually on stocks.
Yeah, so an upgrade by FTSE from frontier market status to EM status is imminent. That will happen later this year. That's the first stepping stone towards an upgrade by the MSCI. The FTSE upgrade alone probably will directly bring in something like $2 billion worth of AUM that's just tracking the index. Probably be another sort of 4 or 5 billion that comes in just from getting that stamp of approval. One thing we think that is not really being discussed about that much, which is also very important, is an upgrade of the credit rating. Currently, Vietnam is one notch below investment grade. Getting an investment grade rating is well within Vietnam's reach. And we've seen from examples in stock markets in other countries in the past that can even have an even bigger impact. Of course, it's mainly about the bond market, but that can even have a bigger impact in terms of attracting, you get that stamp of approval, and a lot of investors will pile into the stock market, foreign investors.
Okay, and so Khan, I mean, how are you translating this? So, you're hearing domestic demand, improving credit ratings, which suggests that you're probably going to get more attractive cost of capital. How are you positioning the portfolio to benefit from these developments?
So we manage $1 billion in this fund, and if you think about how the portfolio focuses around the industry groups, about a quarter of it is financials, a quarter in real estate, a quarter in consumers, and a quarter in industrials. So if you sort of extract what Mike says around the recovery in the consumer sector, then a quarter of the portfolio will see a very strong recovery this year. This consumption story has been going on for quite a long time. Vietnam fundamentally is moving from to a middle-class economy, rising wages, more opportunities. But within that, we've seen that post-COVID, the household savings has been building up quite significantly. And I think the concerns of 2025, whether it be tariffs or other concerns in the market, they're going to go away to a far more vibrant consumer market. So our portfolio, which has names in both consumer discretionary companies, consumer staples companies, in healthcare, for example, we are one of the largest healthcare investors, private equity healthcare investors in the country. These are sectors that are very much going to benefit from this consumption story. Beyond that, last year we saw a very strong recovery in real estate. So we again, some of the points that Mike made in his paper around the outlook for 2026, a lot of that has started from the reforms that have happened in 2025. whether it be to faster approvals of projects, getting, removing barriers for governments, for businesses to do business. So that's going to accelerate a lot of approvals, and sectors like real estate are going to benefit from that as new projects go online. And then finally, if you think about sectors like industrials, which within that we have things like ports or construction material companies, again, they're going to benefit from this very strong economic story that's really unfolding in Vietnam.
And of course, everything we're talking about is about this year, 2026. But when you invest in emerging markets, there's kind of a fairly well-known playbook. You invest in things that people want when they become middle class. They want better housing, healthcare. These countries always build out the infrastructure. So it's both a 2026 story and also kind of fits into the long-term pattern for successful, a well-known pattern for successful investing in EM countries. So.
Okay, so clearly, people will look at you because you give them access to these kind of opportunities. And I rather than moving into the theoretical space, I love to turn this into real life. So walk us through some of the privately negotiated investments and where you see pockets of opportunity, and maybe some examples of how you sort of move things in the portfolio.
Yeah, so if you think about the activities in this our portfolio, I look at the last 12, 18 months, we've put about $350 million to work into new opportunities. We've seen recently a resurgence of the IPO and pre-IPO market.
Yeah.
So several transactions and opportunities we've taken advantage of in this portfolio, including investing in one of the largest security brokerages in the country. It plays to the question you had earlier to Mike. As Vietnam goes from frontier to emerging, there's going to be a lot more participation in the market.
Yeah.
So we took advantage of a really interesting opportunity where one of the banks decided to IPO their securities business. This was an opportunity that was perhaps 3 times oversubscribed. We were able to access that. We were on the ground. The company went to IPO in October. We're up 20% on the position. Another example is an infrastructure company. This is an infrastructure company that's involved in many different sectors in the economy. They decided to IPO a subsidiary, which was in the industrial and residential space. That opportunity came to us in December. And last Friday, I was at the Ho Chi Minh Stock Exchange with the company ringing the bell because they've fast-tracked their IPO process and listed on the stock exchange. That stock is up 20% on initial rising. So for us, those are some examples where within the economy, within the markets, we're seeing a lot more activity. And how we'd like to think about our portfolio and our strategy is, you have some funds that give you access to the market, to the benchmarks. Where the way we look at our portfolio is that it gives you access to the real economy.
Yeah.
Right? And that's where we like to think how we differentiate ourselves.
Okay. Then, so for investors who are taking a look at it, clearly valuation is going to be a consideration. So let's take a step back. And firstly, what are the valuation considerations in terms of Vietnam on a relative basis? But then also come and talk about, what is prevalent for trusts. How do you think about your discount to NAV, etc., and maybe walk us through your views on that?
So look, perhaps on the market valuation, I'll get Mike to cover that, and then we'll turn to the trust. But
the overall market's trading around 13 times PE, and the earnings growth probably in the high teens, so it's below 1 times on a PEG basis. Okay. Our portfolio, however, is
very different. And I think, when we talk to investors, our fund, is trading at a 20% discount to NAV, yet delivering a 20% earnings growth and trading at 10 times PE. So it's a very attractive opportunity for investors to look at an opportunity like our fund. So thinking of what Mike said, if the market's trading at 13 times, we're giving a very attractive valuation trading at 10 times. If the market is giving, earnings growth of say 18 times, in our portfolio for 2026, 2027, we expect between 20 to 22% earnings growth, and you're getting that at a 20% discount at the moment. Gives a really interesting opportunity, we think, for investors to access this story.
Gentlemen, it's been fascinating. Thank you, firstly, for both of you coming to the Vantage cameras. I think what I will do is also include a link effectively to your Outlook if that's available for investors to take a look at. Thanks again for being on Vantage.
Great to be back on the show.
Thank you.